Is the New Jersey housing market now in for a reset? Yes and no. I'm going to share with you the data for the month of May for the entire state of New Jersey. We're going to take a look at what the housing market did. I'm also going to touch on Bergen County, as always. I'm also going to be talking about an article about the issue with the housing affordability in New Jersey and how there are a bunch of counties in the state that are at risk for major housing price declines. So got a lot to talk about today. So let's get started. Welcome back to my channel. If you are here for your dose of real estate reality, you have come to the right place. My name is Jackie Baker. I'm a local real estate agent serving the northern New Jersey area. And if you like my content today, can you give me a big thumbs up? And if you like to hear about all things real estate and also about New Jersey, you can subscribe too. I highly recommend that. I'm going to jump right into the data for the month of May. And this is off of New Jersey Realtors like I've done in the past. So are we in for a reset right now? As you know, I've been talking about the past couple of weeks. We had a rise in interest rates and they're over 6% right now. So what's happening? How is this going to impact the market? Now, keep in mind, this is for the month of May. Wasn't much of a change over prior months. Inventory is going to tiny bit.
It's pretty small. So small.
This month that we're in right now, it should be more telling as to how these rates have affected the market in June. And also the summer months, they slow down, right? They really slow down a lot. So I think that coupled with the interest rates, I think we're going to see some interesting numbers when I do this report again in July. But let's get into May right now. Let's take a look at what happened. So new listings, this is year over year. So new listings in the month of May of 2022 were at 10,269 versus last year in 2021, there was 11,259, just an 8.8% decrease, not a huge decrease. So we're seeing this inventory go up a little bit since March. So pending sales, they're down 10.4% for the month of May. There was only 7,411 versus last year, there was 8,271. And let's talk about median sales price and average sales price. Both those prices had an increase of over 12%. So in May of this year, the average sales price was $621,816 versus this time last year, it was $551,460. And if you look at the percent of list price received for the month of May this year, it was higher than last year. It was 104.9%, 2.1% increase. So houses sold for 104.9%, like 4.9% over asking price. Wow. Now, here's the other thing that's crazy. So homes for sale, all homes for sale in the state of New Jersey was only 16,300. It's a 20% decrease from last year. Inventory is still really tight, guys. Last year, there were 20,513 homes that were active on the market in May of 21. Really, really tight. What I think is going on, look, we are in tough economic times right now. And if you saw my video a few weeks ago regarding, the rising interest rates and how it will steal more inventory, I think this is what we're seeing. Now the interest rates are well over 6%. New Jersey has a really large number of homeowners and mortgage holders that have interest rates below 4%. So people aren't going to be trading up so much right now. I think we're still going to see people that are moving out of state or sell off their second properties if they have a second property here in New Jersey. And again, this is what I'm getting. The listings that I'm getting are people that are moving out of state or selling a second property. It's just, I have not done a trade up this year at all. Nobody wants to give up those low interest rates and pay more money for a house. And then you couple that with the rise in gas prices, the cost of groceries. I think this is keeping things down a little bit. They've increased. Definitely the inventory has increased since January, February, but it's not enough to meet the demand. Okay. So let's talk about Bergen County. In May, there were 1,008 homes on the market. Compared to last year, it was 1,120. It was a 10% change, 10% decrease year over year. Closed sales, only a little bit more. It was 648 closed sales versus last year was 639. Median sales price, it went up 8.3%. So in the month of May, the median price was $688,000 versus last year, which was $635,000. So we're still seeing more of the same of what's been going on this year. It's slightly better, but I'm curious to see what's going to happen in June, what those numbers are going to be like, because I've shared with you in the past, I've already seen on my own listings and working with my buyers, it has definitely slowed down, especially since those interest rates have gone up. Now, if you are on my channel, you follow me on my community page, I did a couple of polls asking people, if you were in the market to buy a house, are you out now? Are you hanging in? If you look at the number of people that are backing out of the market, it's really high. The latest poll I just did was about, now that interest rates are over 6%, are you more fearful of buying a home? As of today, 82% of people on my poll said yes, they are fearful of buying a house right now. And look, I get it. I mean, we're in really tough economic times and, people don't want to sell if they don't have to. I mean, what's the point? I don't know where this is going to go, guys. I really don't. It's mind-boggling how this market has been this year. But now what's even more concerning is this article. It just came out on northjersey.com talking about housing prices are going to be falling. And there are 8 counties in New Jersey that are among the most at risk. This article is pulling data from this group, Adam.com. When I did a video about the foreclosure rates in New Jersey a couple months ago, this is the company that I was referring to. Now they just came out and said there are 8 New Jersey counties that they're at risk for a major housing market decline. So let's get into this a little bit. 8 New Jersey counties are among the most at risk in the nation for a housing market decline, real estate firm Adam Data Solutions said in an analysis released Wednesday. The firm cited soaring housing costs in North Jersey and rising foreclosures in the Philadelphia area. Housing markets with poor affordability and relatively high rates of unemployment, underwater loans, and foreclosure activity could be at risk if we enter a recession or even face a more modest downturn. 6 counties in New York's orbit were among the 50 most vulnerable to housing market troubles based on the data from this year's first quarter: Bergen, Essex, Ocean, Passaic, Sussex, and Union. Camden and Gloucester counties outside Philly were also on the list. This is true, and I've been mentioning this for months now. The affordability crisis, it's a crisis, especially in New Jersey. Look, it was always expensive to live here, but now it's just gotten worse since the pandemic. But I just want to remind everybody, they said that data was pulled from the first quarter. Now that we're coming to the end of the second quarter, I'd like to see where that data stands. Let's go further into this article. Unaffordable housing in New Jersey. New Jersey stood out for some of the country's highest levels of unaffordable housing, defined as areas where mortgage payments, property taxes, and insurance consumed more than 30% of average local wages. 3 of the most expensive were local. And you see right here, it says number 1, San Joaquin County in California, 48.9% of average local wages needed for major ownership costs. Bergen County, 48.3%. 48.3% of average local wages are needed in Bergen County to afford a home. Yeah, it's a lot. It's expensive. Now, it goes on to say here that the Federal Reserve rate hikes to bring inflation down from a 41-year high are having an immediate impact on home affordability, sales, and pricing. The Fed has raised rates 3 times this year, helping boost home mortgage rates to the highest level in 14 years. Whether the Fed can execute a soft landing or steers the economy into a recession will determine the fate of the housing market over the next 12 to 18 months. Despite the warning, Michael Latman, who is the president of KL Sotheby's International Realty with 5 offices in New Jersey, he thinks the North Jersey employment market is diversified enough to absorb the economic risk. Current homeowners who purchased when rates were lower, they've been below 5% for most of the last decade, won't be motivated to move, Latman said in an interview. That means the supply of available properties will remain low for a few more years and home values are likely to be stable even if interest rates continue to rise, he said. I agree with him. I do. Like I just said before, there's such a large number of people, mortgage holders that have rates below 4%. They're not going anywhere. So there's no other homes for sale. And oh my God, it's not going to crash. New Jersey is not going to have a housing crash. This whole thing that people are getting into, that they're still sitting on the sidelines and they're reading the headlines and they're getting really scared. Are we going to see a decline? I've said it again and again. Yes, we are. Is it going to completely reset? Look, only time will tell, right? They said it's going to take 12 to 18 months with these higher interest rates before we really know how it's going to impact the market. So is New Jersey in for a reset? Maybe, but the problem is when you have this many people who don't want to sell their house because they don't want to pay more money for a house and a higher interest rate, this is what we're running into. This is going to be a problem. Since New Jersey is one of the densest and most crowded states in the country, it has some of the oldest and least efficient housing stock with little available land for new housing inventory. Affordability has always been a challenge for New Jersey residents, but higher paying jobs in New York City and Philadelphia have helped suburbs around those employment hubs. If more jobs leave these cities, either through hybrid work initiatives or an exodus of employers, adjacent counties could start to see a decline in population and negative impact on housing prices. Something else we got to watch out for. A lot of people are going to remote. Although this New York City has opened up, a lot of people haven't gone back in. Still hearing about, I know, like my husband's company, a lot of people do not want to go back into Manhattan. They don't. I'm sure there's a lot of companies that are experiencing that. So you see more of that hybrid shift. Why are companies going to want to stay in New York City and pay exorbitant rents to keep their offices there? Also, same in New Jersey. Could that have an impact? I am curious to see how this is all going to shake out. That's your data for this month on the New Jersey housing market. And is it resetting? Not right now. It can. I think it will. New Jersey is such a unique state, given that it's so close to New York City. You have all of these jobs, and then if people want to do remote work and they can work from anywhere, they can up and leave. You know, if people aren't going to go back into Manhattan, they don't want to go back in the office, it's going to present problems. So let's keep an eye on it. And you know, I always will keep an eye on it. I will analyze the data and I will always bring it back to you to help break it down, to provide good information for you to help you make a good decision. If you want to see any more videos that I did about the New Jersey housing market in the past, go check these videos out right here. And if you have any questions for me, feel free to drop a comment below. Reach out to me through email, or you can text me. I'm always happy to help. Thank you so much for watching me today. I am Jackie Baker with Coldwell Banker Realty, and I will see you next time.